The stock market took a beating today, but Larry Kudlow had some financial advice for everyone. Can you guess what he said? Of course, he told people to buy the dip. Literally, what's important to understand about the performance in the financial markets today was representative of the fragility and the underlying weakness. This cannot be reversed by printing money. This can't be corrected by lowering interest rates, but surely that's what they'll do. They just need a good excuse. You came here for the truth, so let me unveil that for you. This was a big day in the markets, not on the way up, but on the way down. I'm going to show you some details that you need to know. All of this, the ins, the outs, top to bottom. Let's begin with this. Taking a look at the markets themselves, you can see the Dow Jones down over 1,000 points. Of course, the S&P and the Nasdaq also down significantly. We haven't seen these kind of drops for a while. The only thing that was up in this case here was the VIX, and believe it or not, it has actually hit 25. That's big news here because as soon as it makes it over 20, it looks like the Federal Reserve and their short position on volatility isn't working so well. That can easily change, of course. I just wanted to give you an update on all of that. I'm sure you've seen this all, so let's just take a look at what CNBC had to offer. Now, after the market closed, I went to CNBC, and this is the first article that came up. Turnaround Tuesday. Stocks tend to bounce back quickly from market drops like this one. And I think it's interesting because while, of course, this might be true, and that might actually be the case. You might be watching this video right now on Tuesday or even later and find out that the market has come up. In fact, the futures have shown that they will rise on Tuesday, trying to buy that dip and so on. But it's just funny because we understand what this really is all about. They're trying to get investors to buy. And why? Because they have their advertisers and the people who spend money into these websites, into these news services, and I understand that. But people don't get swindled by all of the marketing. Understand what is marketing and what is information. Take a look at this. I really like when they do these charts because we could see this comparing gold and the Dow Jones just as an example. In this case, gold being, of course, the gold colored line and the Dow Jones being the green line. And it's normalized as the beginning of the year. And it has really changed in the last little while where gold has been up 10% on the year, whereas the Dow Jones being down approximately 1.5%. And that's just giving you an idea of what has occurred. We know exactly what's going on with gold because the fear is certainly there. A lot of people are worried, investors are concerned about one thing or another, and that's why they put their money into safe haven assets. On the other hand, we've seen the Dow Jones, the US stock markets lose all of their gains for 2020. Dow's biggest one-day point drops in the last 3 years. This was updated in the middle of the day, it looks like, because it only shows 933 points down, but it actually still remains in that same spot because I believe the number was 1031. And this just shows you that while the drop was significant, it's not the biggest ever. At the same time, the markets are bigger today, so a 1,000 point drop in terms of percent isn't as significant as it was previously. Look, I got it. I see the comments all the time. Well, when you divide this number by the total, it's not significant. I beg to differ actually because it shows you the underlying fragility of the system. When the market drops by 1,000 points, that's not just a down day. That is big concerns coming up. Then we have the plunge protection team. Then we have the buy the dip algorithms that come in on the next day or the afternoon or whatever it might be. Then they are supporting the markets in this way. But if you have to actually be a little bit more concise about what's happening, you see it for yourself. I don't need to tell anybody that when you see 1,000 point drop in a day, we should be paying attention to it very closely and what it actually means. Not simply taking the number like this, S&P 500's biggest one-day percentage drops in the past 3 years, taking this, oh well, it's only 3%, not a big deal, but understand what that 3% represents in that given day at that given moment. NASDAQ one-day point change, this is a significant drop as well, again just showing you we have not seen these type of drops ever before. Again, market's much bigger now, but it just shows you how significant it really is. Larry Buy the Dip Kudlow literally said this today, if you can believe it or not. Investors should seriously consider buying the dip. That's his quote, and I'll give you the exact wording down here. If you're a long-term investor, you should seriously consider buying these dips. This is unbelievable because this is financial advice being given to you at this level, and it is truly unfortunate that so many people will buy in. There's no doubt about it. But what kind of propaganda are they trying to spread? What are they trying to do exactly? Are they trying to help you out, or are they worried about the bottom line? Fidelity and Schwab say some clients experienced technical issues amid the 800, which was actually 1,000 point Dow plunge. It was interesting because a lot of people, they couldn't log in. They were having technical difficulties, it looked like. This is a post on Twitter. Looks like Fidelity is trying to protect investors from themselves, or I just lost all my monies already today. Fidelity, it would be great on a day like today if your site worked. Now, do you think that something like this would break on just a normal day? Or is it going to break on the busiest day? When does your air conditioner break? The hottest day in the peak of summer. When does your heater break? On the coldest day of winter. That's what happens. But people don't realize this going into any market. They think this is liquid. I can sell at any time. Now, yes, of course, they resolve these type of issues, usually very fast, usually within a couple hours or so. But if you wanted to sell at that given moment, what would you have done? Oh, well, I do this and that, and there's all of these different excuses. I won't sell, I'm a long-term investor, and so on. But I make the point again, what would you do if you needed that money at that moment? It's just like a bank holiday. Yeah, it's fine if you could look at your account and see that there's money in there and that's apparently allocated to you. But if they don't let you in the bank, the ATMs are shut down, or they're limited, what do you do? And this gets into what the Federal Reserve is really up to. Now think about this, where we are at today, ultra low interest rates, quantitative easing level 4, massive intervention, forward guidance left, right, and center. And then we have this. The Federal Reserve's ability to tackle the economic turmoil is very limited. A reduction in US rates won't address the supply problem coming out of Asia, nor would it reopen shuttered schools and factories. That's exactly right. This cannot resolve the problems that are in existence today. But just like I showed you, one of those individuals from the Fed, he said, well, maybe it won't fix the problem, but it will help some of the symptoms. And of course, it will not, but they'll just do it anyway. This article here was written by a former Fed president. I thought it was interesting. Rates are still only a little above zero, and so the Fed has few tools available to offset adverse shocks. In this situation, a basic precept of monetary policy is to keep the economy as healthy as possible in advance of downturns. As the New York Fed Reserve Bank President John Williams explained in a speech last year, that means cutting interest rates in a preemptive fashion when threats to growth become more pronounced. Of course, it was exactly in response to the increase in the global downside risks that the Fed cut rates by 75 basis points, or 3/4 of a percentage point, in 2019. And I quote, I would urge an immediate cut of at least 25 basis points and arguably 50 basis points. That's a cheap insurance policy for the economy that the Fed shouldn't pass up. Even further down, they want interest rates to be at 1%. How much room would they have to go down when they're already basically at the bottom? We've been here before, and they want to take it down even further. When interest rates get to 0%, then what do you do? Well, I have a good suspicion as to what they do. Maybe they'll bring it into the negative. They say they won't, but hard times call for some extreme activities or interventions. Well, we're going to see in time. Fed's Mester A standing repo facility may be useful. They've been talking about the standing repo facility actually for quite some time. It's not just because of the repo crisis. This was going on even before, and they just need a reason to bring it in. They want to be able to not necessarily do overnight operations the way that they are doing them every single day. They want to be able to have a constant IV into the system just to allow this to continue. The system is long gone, and the printing of the money allows it to stay afloat somewhat. 10-year treasury yield falls to 3-year low, 30-year rate hits record low. In the second paragraph, essentially a rotation out of risk assets and into safe havens. That's what occurred on this given day. Tomorrow might be a different story. We'll see how that plays out. This just shows you the 10-year yield, and it actually dipped below 1.4. Now, that is considered by Bank of America to be the tipping point of a recession that will follow. We'll see if that's necessarily the case, but I thought it was interesting that it did dip below. Jim Paulson had this to say: the 30-year yield last week broke to new lows, and the 10-year yield is on the cusp of that. I think that is a bigger culprit behind the sell-off than most appreciate. All of the headlines are about the big C, but I think the bigger thing in the room is the bond market. It's been a chronic fear for some time. Actually, it's been a fear throughout this recovery, but it certainly has been since last year when the stock market took off and bond yields went down. That's the idea. What does the bond market know that the stock market doesn't? Bond market seems to be suggesting some near-term calamity while stocks seem to be ignoring it, and it's creating a lot of fear. We've been talking about this extensively, and I just wanted to show you that even Jim Paulson has decided to weigh in. Mortgage rates continue to decline right now. 30-year fixed mortgage hitting 3.34%. The lower mortgage rates go, you're going to have more people refinancing their homes. You're going to have more people borrowing money. They're going to get into homes that previously they could not afford. Now they're buying in. Of course, this will extend the bubble further and further. People can't actually afford it, but they'll find out in due time. Really quickly, a couple more things. You're looking at the GDP Now statistic. Now, you would imagine with everything going on since the beginning of the year up until now, that these stats would be slowly but surely falling, but somehow this has actually increased. I can't believe it, but the GDP Now stat sitting at 2.6%. A few days ago, this was at 2.4%, so it continues to go higher, as did the New York Fed's Nowcast model, which rose quite a bit. It's over 2% now, 2.01%. I don't know where they're getting these figures. I don't know where they're getting these ideas, but it's all humor for you and I. Take a look at what Northman Trader had to say. Imagine central bank reckless pedal to the metal interventions trapped everyone long into historic valuations, and now an unforeseen trigger pushes the global economy into a recession with central banks already all in. It's going to be huge. It's going to be amazing to see. That's all for this video. If you found it informative, hit that thumbs up button. I really do appreciate it very much. Thank you. If you want to learn about e-commerce, if you want to understand what all these people on Amazon are doing, all the details are located in my free e-course for you. It's jam-packed with hours of information in there, totally free, theamazongps.com. Have you read my 2 books? If not, definitely check them out. I think that they are so important for everybody to understand. They have so much data. They're explained so easily, no jargon, none of that stuff. Check them out in the link in the description to see if they're right for you. If you want the audiobook version instead, themoneygps.com. Well, hello, you made it to the end. I want to thank you for that. Have you seen this video yet? If not, I would highly recommend watching it. Jam-packed with data. Take a look. I'll see you there.